Today I'm going to show you how to make $330 on Robinhood in 60 seconds or less. Let's go. Okay, so the first thing that we're going to do is ignore the fact that I have 11 messages on Tinder. We're going to open my Robinhood account, enter my passcode, and we are going to look up a stock that I own. This is Blue Apron. As you can see, I own 1,000 shares of this stock. So real quick, to make my money, I'm going to click Trade. I'm going to go to Trade Options. I'm going to go over to July 15th. I'll explain all this in just a second. I'm going to sell a call, so exactly as I have it set here. And I'm going to select the $3 one here. I'm going to go to Sell, and it says it's willing to give me 35 cents per share of Blue Apron that I own. Just to make sure I get filled, I'm going to do 30 cents. I'm going to click Review. I'm going to swipe up to Submit. And just like that, I made $330 on Blue Apron in no time flat. Easy as pie. So what I just did is a technique you can do on Robinhood called selling a covered call. It is one of the easiest, best, and most risk-free trades that you can do on Robinhood to collect income every single month if you want to. If you're not doing this, you're leaving a lot of money on the table. So let's go through what those three terms mean. The first thing is selling. Selling sounds exactly what it sounds like. You are selling something. So when you go to sell a security in the stock market, you're selling it to a potential buyer, right? In this case, I own 1,000 shares of Blue Apron. I am selling the right for someone to buy my shares at a better price. Of course, Blue Apron's in a downturn, so I don't think that's going to happen. So this is a bet that I want to make. Okay, so I'm selling. That's pretty obvious. Covered. What does that mean? Again, covered sounds exactly what it sounds like. When something is covered, that means you're covered. You're set. You don't have to put up any more money in order to make this trade. You can get paid right now without having to do anything else other than click those few buttons I just showed you. Okay, so selling and covered, that's very simple. Now, you're selling a covered call. A call is a type of option that gives the buyer the right to potentially purchase a stock at a better price at a predetermined date in the future. It's a very technical definition, so let's break that down. Okay, so in the case of Blue Apron, I just sold the right for someone else to purchase the stock for $3. So what that means is that if the stock goes above $3, that means that whoever bought that contract is going to have the right to purchase that stock from me for $3. Now, Blue Apron's trading for about $2.70 or so right now, and I'm making a bet that it's going to stay under $3 through July 15th. Now, why am I making that bet? I'm not really sure what could happen over the next week or two, so I didn't do June because there's a chance that the stock market could rally. However, the stock market's been in a downtrend, and Blue Apron has been in a downtrend. And I think that over the next month, there's a very, very high probability that the stock is going to stay under $3. So I was just able to collect $330 on that bet. Worst case scenario, here's what's going to happen. The stock is going to go over $3, and I'm going to be forced to sell my shares at a higher price than they currently are. If it goes to $3.10, $3.20, $3.50, even $4. So again, the worst case scenario is I might have to sell my shares at $3 when maybe it's trading higher than that. But again, I just made $330. So in this case, my break-even price is $3.33. If that is where Blue Apron closes on July 15th, then I am looking at a net zero. All the money I made on that trade just now, all the income I made, that'll be washed away because I'll be forced to sell the stock for $3 when it's $3.33. That sounds really technical. Remember, I just did this in 60 seconds or less. So selling a covered call, now that you know what that means, you understand that in order to make this trade, you have to own a stock, and you have to own at least 100 shares of a stock. Each options contract covers 100 shares. So in this case, I own 1,000 shares of Blue Apron. So I was able to sell 10 contracts for income, for money I just made. Clear and easy, just like that. So Blue Apron is a stock that I want to own long term. The stock in total is worth about $100 million. That's its market capitalization. I think this could be $1 billion stock someday. That means if I hold on to my shares and never sell, and the stock goes up to $1 billion, I'm going to make about 1,000% return on my shares. Now, that might happen over 2, 3, maybe even 5 years. I don't care. I believe in the company's long-term value. I'm actually a customer of Blue Apron. I get their meals sent to me every single week. I love to cook, I am Italian, but I don't always have the mental energy at the end of the day to figure out what I'm going to cook. And Blue Apron sends me the ingredients, they send me the instructions, so I'm able to make restaurant gourmet quality meals from home 2 days a week, and I usually have leftovers as well. So I am a customer of Blue Apron. I believe in them, and I believe the company's long-term prospects. But rather than waiting potentially years and years and years to make a beautiful profit on the stock, I can collect rent every single month by selling covered calls on the shares that I own. And so long as the stock continues to sort of stay right about where it is, again, it just needs to stay under the price that I determined. That's it. I'm going to collect rent potentially every single month on this stock by selling a covered call. Now, again, the worst case scenario is that the stock goes up and I'm forced to sell it for a higher price than it is now. So what if the stock goes down? What if it goes from about $2.70 where it is now to $1.70? Well, I own 1,000 shares of the stock, so losing $1 per share would be a $1,000 loss. Except it's not a loss because I haven't sold the stock yet. Again, this is a stock I plan on owning for years and years and years and years and years. And I'm not selling it for a loss unless I actually sell it. So that loss is intangible. I don't feel it. This is money I put into a stock that I don't need tomorrow, that I don't need next week, next month, or really even next year. This is a stock I plan to hold for a long time until it pays out a phenomenal profit. But so long as the stock continues to stay in a downtrend, I can sell covered calls to make money on it every single month. Again, I'm recording this on June 7th, and by July 15th, I'm going to be able to do this again. I'll be able to do this in October. So let's say that the stock does go down to $1.70. Well, I can take that $330 I just made to buy about 200 new shares of Blue Apron if I wanted to. Wow, that's 200 shares I'm going to own now. So that's another $30 to $60 I could make every single month if I continue doing this. I could also use the money I just made to pay my utility bill. I could put it towards my mortgage. I could buy an expensive gift for my girlfriend, which, let's be honest, that's probably the way it's going to go. The point is that this money is mine. Worst case scenario is I'm forced to sell the stock at a better price than it is today. It's really the best, most risk-free proposition you could face in the stock market. Look, the stock market is in a downtrend right now. There is no debating that. It looks like we are in a bear market. But rather than waiting for some indeterminate time in the future for your stocks to turn around, you can do this every single month on stocks that you own a minimum of 100 shares of every single month if you want to. This is money you're just leaving on the table if you're not doing it. Now, I like to buy penny stocks. Obviously, penny stocks are cheaper than, say, Amazon. Even after a recent stock split, Amazon still is a couple $100s per share. Okay, so that's going to be a little expensive to buy 100 shares of. Blue Apron is just $2. So I could buy a couple hundred shares of that for just $2 or $3. And I can basically collect money, collect income on it by selling covered calls every single month that I want to. Again, worst case scenario, I'm forced out of the stock at a slightly worse price that's still higher. At that point, if I still want to own the stock long term, I can buy back into it and I continue to do this every month. Again, the best way to do this is to sell covered calls on stocks that you own that are in a downtrend. But you probably don't want to sell them yet because you don't like to sell stocks for a loss, but you like to make short-term gains on them as well. So you can do this to collect income that's yours free and clear every single month. You're not doing this, again, this is money you are leaving on the table. Now, let's say you don't own any stocks at all because you've heard the stock market is a scam or you've heard that it's volatile. And you're right, it is volatile lately. Volatility is a beautiful thing because when stock prices are going down, that means you have the chance to purchase them for a lot cheaper. So if you've never invested in the stock market before, now's a great time to start getting in because stocks are cheaper than they were a year ago. And there's a lot of great stocks you can buy for real cheap right now. And if they go lower, great. That means you can buy more stocks for even cheaper. And you can use this covered call strategy every single month if you want to collect income. Again, to buy more shares on the cheap if you want, or put it towards groceries, expenses, whatever it is you need. If you like this video, please click the like button, comment, and subscribe to our YouTube channel, True Options Masters. At True Options Masters, I've assembled some of the best trading experts in the world, and we talk to you on our YouTube channel every single week in our options arena, in our monthly market outlooks, and other videos. We also publish a 7 days a week daily newsletter at 11 a.m. called True Options Masters, which you can find online or in our description box below. But again, if you like this video, please like, comment, and subscribe, and you will be first to see new content from True Options Masters later on If you decide to use this covered call strategy, please drop a comment in the comment section below. Let us know what you did. Let us know if you like this video, and we'll see you next time.